Gurmeet Chadha joins us and let's take a conversation forward. Gurmeet, looks like the decks are clear for somewhere elevation for the market. Geopolitical concerns have settled down. Markets, in a sense, have taken the Fed communication into their stride. And the numbers which have come out, whether it is from TCS or for that matter HDFC Bank, they do not spark too much of nervousness. Okay. 2317 for the Nifty. So Kunal, are we looking at big 1,000-point rally now? Has that started according to your data?
Not exactly, Nikunj. It's just that the mid-cap into the market is looking a much more buoyant this time around. So that's the only change, that you're seeing the mid-caps and the small-cap indices a lot more better. So, the point which you were mentioning at the start, my sense is that the prices may have bottomed out for mid-caps and small-caps, but the sentiment is not yet bottomed out because there are, when we see the risk appetite and the IVs for many of the mid-cap odd names, it's still a bit, on the, lower side, and that generally indicates that maybe the risk-on sentiment is not as back in terms of the mood of the market. But the prices have definitely made a comeback. Many of the stocks in the mid-caps and small-caps are actually making strong breakouts for themselves. You're seeing those double-digit up moves coming back into those mid-cap, small-cap in the market. So I would probably want to concentrate more on the stock-specific as of now, because Nifty is still not out of the major hurdle, or at least a first major hurdle for itself, which is around the 22,500 levels.
Right, okay, just analyzing some of the other movers in trade, and OMCs are having it good today. So BPCL, even though it's come off a little bit from the top of the day, I think still going strong by a good 3.25%. Axis Bank has made a very strong move, a good 2.5% higher. Kunal was highlighting L&T just a short while back. That's going good, another 2.5% in trade for this one as well. And Bajaj Finance is seeing a nice follow through from its price action on Friday. Another 2.5% of a bump up coming in for Bajaj Finance as well. In fact, Naresh, I want you to come in here on the charts of Bajaj Finance as well as Axis Bank both.
So I'll start off with Bajaj Finance. Now, this has finally started looking interesting because after a long time, the stock has started showing relative outperformance. And the bigger problem in the long-term charts has been that a mark at 8,000 where it has not been able to cross. So that is what we see next eventually. But in the short term, we've started seeing reversal both in Bajaj Finance as well as Bajaj Finserv. So out here, it now becomes a buy on dips with a stop loss below 6,800 and upside towards 7,700 to 8,000. Then going to Axis Bank, now this stock has been making a lot of whipsaws over the last 6 months. Every time it goes to 1,030, the stock reverses back. On the upside, 1120, 1130 is the upper band. So this has become the band for the stock. Once it sustains 1120, that is where we call the trend has finally got into momentum, but still has been a relative outperformer compared to the HDFC and Kotak as such.
Okay, point taken. And Axis Bank, of course, will be in focus this week on account of that fundraise. Remember, last week the stock was fairly volatile, wondering whether there's going to be any equity dilution or not, but that's something we'll get to know on April 24th. But what we are watching out for today is, of course, Reliance Industries earnings. So let me take it across to Somit to get a sense as to what we should expect from the numbers. It's expected anytime post 7 p.m. today.
Well, for Reliance Industries, on a consolidated basis, overall stable set of numbers are expected. Revenue and EBIT are expected to be higher by around 4 to 4.5%. Net profit is expected to be higher by around 5 to 6 odd percent. Segment-wise, if you see, in fact, EBITDA, if you see, the company is expected to report its highest ever quarterly EBITDA, and this will be purely aided by the O2C segment, that is the oil to chemical segment, and also the telecom segment. In the oil to chemical segment, if you see, the EBITDA number is expected to be 13% higher on a sequential basis on the back of higher refining margin, higher throughput, and because of better petrochemical spreads. Now, throughput is higher because in the third quarter, that is the base quarter, the company had a planned maintenance shutdown, and hence we are seeing such kind of an up move on the numbers. When it comes to the retail division, the revenues are expected to be higher by around 1 odd percent, but on the EBITDA front, we are seeing a decline. But do remember, the base quarter, that is the third quarter, was a seasonally strong festive quarter, and hence we are seeing such kind of a decline. On a YY basis, if you see, the retail segment continues to grow for Reliance Industries. When it comes to the oil and gas exploration business, there the EBITDA is expected to decline by around 3 odd percent, and that is because the gas output and gas prices were pretty much stable, but government's profit sharing had increased on a sequential basis, and hence we are seeing this marginal decline of around 3 odd percent. And lastly, when it comes to the telecom business of Reliance Industries, there also what the growth that we are seeing of 2.5 to 3% is purely on the back of higher subscriber addition. Subscriber number for Reliance Jio is expected to be around 48.1 crore as against 47.1 crore that we had seen in the previous quarter. And because of this subscriber addition, we are seeing the pure growth of Reliance Jio Infocom. On the other hand, if you see the company's ARPU, they are expected to be pretty much stable at around 181.8 rupees per user per month. And do remember, this is the 8th consecutive quarter where Reliance Jio is expected to report a subscriber growth. Now, key things to watch out for from earnings would be their outlook, their capital expenditure outlook, when they're expecting tariff hikes to come in, and what is the capex plan and monetization plan when it comes to the new energy business would be important to track from Reliance Industries earnings today.
Okay. Lot of mid-cap stocks today. Gurmeet, the small cap index is less than 2% away from its all-time high, and there is no participation, there is no excitement, there is no euphoria. NAVs are down, but the index has gone up. So for an index which 45 days ago was supposed to be in a bubble zone, has recouped everything it lost.
Because that's probably the nature of the beast. I think small cap index, you can have one days where you can lose 6-8% in a day. We've seen that in November. We saw that when SEBI initiated the stress test. Also, as a category now, if you see the small cap AUM, it's almost 2.5 lakh crores. In fact, some of the funds, the large funds like Nippon or SBI, they're individually like 30-40,000 crores each. My sense is I see there are a lot of pockets where we are unable to justify valuations, but in a bull market, you stand to be humbled by the market. But I think that's the space you have to be very, very selective now. So there are pockets where you're still getting good businesses at 20 odd times, 50 odd times, which you can look at. And there are pockets like EMS or some proxy defense and space names, some PSUs which have just run up because the PSUs are running up. But it's very difficult to justify valuations. So you got to be a little selective here because that's where the accidents are likely to be happening. I would be a little more biased towards large and maybe large mid caps in terms of incremental allocations.
Okay, so that's a take coming in on some of these top buzzers right now. But PSU banking space is also fairly active, apart from, of course, Voltas, which has been going strength from strength. This is going to be a very good season for them. We've already seen that 70% plus kind of growth that the company reported in the quarter gone by. And that was just in terms of preparation for summer. When the summer onset has actually begun in Q1, maybe the momentum will even be stronger. That's what the street is penciling in. But in the meantime, Kunal, from the public sector banking space, which is your top sectoral gainer right now, the likes of Union Bank, Bank of Maharashtra, Central Bank, any name that you would want to recommend for a fresh trade?
So Central Bank is something which looks attractive. 63, 64 is where the stock is trading right now. I think more or less the chart patterns for many of the PSU banking stocks in the mid-cap end of them is very, very similar. These stocks have gone through their fair share of uptrend in the second half of 2023 and the first couple of months of 2024. From there, these stocks went into a 30% odd correction. Some of them, the low beta ones or the more formidable ones, went to just about a 10-12% correction, the likes of Bank of Baroda, Canara Bank, etc. And then now these stocks are coming back into a breakout mode. So I think Canara Bank and Bank of Baroda, of course, and the more formidable ones are the ones which are looking more durable. The charts have been more sustainable for themselves. But even the mid-cap end of the PSU banking lot are now trying to make a comeback. I think time and again these stocks have shown a lot of resilience for themselves, as well as a potential breakout above the 65, 66 mark, for example, for Central Bank. Union Bank also very similar. Bank of India is another chart which has been looking quite attractive. I think closer to that 140 plus mark has been a key pivot support for the stock. So the entire basket looks attractive, and I think it's now in terms of the beta nature as well as the portfolio positioning for each individual. For a high risk trader, I think you can probably bet more on the PSU banking, the mid cap end of the PSU banking lot. And for the more conservative individual, I think SBI, Canara Bank, Bank of Baroda still offers a good margin on the upside.
Okay, let's just bring out the stock price of Zomato as well. That stock is holding up a solid 2% right now in trade. In fact, they've increased the platform fee by 25%. That doesn't quite equate, like Anisha and I were just talking, in terms of a consumer, you don't have to pay much, but at a company level, surely it definitely adds up. So good going for Zomato. It's on its way once again to move to that 200 rupee per share mark. But Gurmeet, what's the call on the stock right now for those who are looking to perhaps add on at these levels?
No, I think we're pretty constructive with the pace at which they are achieving the EBITDA guidance. I think they are likely to meet it ahead. In fact, they guided for turnaround in Blinkit. I think that's something which has been a dark horse. I think the mix is changing. There are a lot of high value stuff which is getting added on quick commerce delivery. The contribution margins are up in the food business. Blinkit is also showing great GMV. My sense is, and mind you, Zomato has its own fleet. My sense is, a third model can also be pivoted, either on logistics or something else, and plus the kind of data they are sitting on in terms of the consumption pattern. So I think I just hope that the capital allocation stays on track, and Blinkit achieves. I personally think Blink could surprise more in coming 2 or 3 quarters. The only risk I see here is that your margins are take rates are 20 to 23%. I don't know how long you can sustain 23% kind of take rates in food delivery. ONDC does that at 5-6%. Too small right now. But that could be one disruption there which could happen. Already we have seen instances of when you order food on Zomato, you get pamphlets, restaurants asking you to order directly and take more discounts. At some point of time, I think this 23% take rate could be challenged. And that's what the company needs to be prepared for in terms of lowering it, and probably trying to do more value-added stuff.
Okay, point taken. Separately, take a look at the stock price of Thermax. That's coming under pressure, down about 5%. JNK India, the new IPO is starting today. Maybe that's the impact that we are witnessing because, of course, in terms of valuation, JNK India comes in at a much cheaper value versus Thermax, and it's direct competition between the two companies. So maybe there is going to be a bit of a pair trade with people moving out of Thermax and playing it through JNK India. That's what at least the stock price is suggesting at the moment. Brigade Enterprises is cooling off as well. It's down about 4%. And then, of course, on the gaining side, Triveni Engineering, that sugar name is fairly active today on a on a sugar rush per se, because it's up around 11%. But let me take it across to Ansh to get a sense as to which are the other price volume buzzers. Ansh?
Right, so Voltas will be the first stock in focus, which even you were mentioning right now. So as you can see in the chart as well, the stock has actually given a breakout from its flag pattern, which usually is a temporary consolidation in a strong uptrend. In addition to that, the stock has also touched a record high level. Apart from this, Aditya Birla Fashion will also be in focus, as the stock has given a breakout from its falling wedge chart pattern with volume of over 2 times its 10-session average volume, indicating good participation in today's up move. Lastly, Indiabulls Housing Finance will be in focus, as the stock has given a breakout from its downward sloping resistance trend line, surpassing above its 20 DMA level. So keep an eye on the stocks.
Okay, Ansh, thanks so much for that. We'll watch out for that. But HDFC Bank, that continues to be under pressure. Let's listen in to what the management had to say in their conference call.
Our focus is on the fundamentals, right? That's how stepping up and enhancing customer engagement, keep them engaged, and that's what gets those deposits. And it's not that we have anything, it's the customer behavior that drives those deposits. And those fundamentals are intact, and that's what operates. And when the market opportunity presents itself, like it presented in this quarter, you see those balances. There are some seasonality to it. We are competitively positioned in the market, and we are not leading with price to bring anything. So that's something to keep in mind. So it depends on how the market interest rate moves on the deposit side. On the yield side, we are not endeavoring to give loans at a lower rate. The objective there on the lending side is that the right quality of origination at the price point that we like. That's where we approach. Depending on the mix of products, that's what determines the margin ultimately, because we price the cost of funds into the yield. And so to the extent that the mix of the products remains stable, you see that the margin is stable.
Right. Have to ask you, Gurmeet, what is it that you made of HDFC Bank's numbers? You track it pretty closely. I mean, the management compared HDFC Bank's journey to, the Mumbai Trans-Harbour Link, pretty much work in progress. Or sorry, Coastal Road, I stand corrected. So I don't know which way to look at it. Convenience brings in speed and, development into HDFC Bank's journey, or work in progress?
I would say the results were steady, but I was a touch disappointed with the management commentary, to be honest. I think the street, at this point of time, you got to be a little more constructive in way credit is playing out. So look at, for example, on deposit front, they've done very well. I think they're almost garnering 24-25% market share on incremental deposits, almost 1.6, 1.7 lakh crore deposit mobilized. The CASA also inched up gradually. The NIMS also probably seems to be finding a bottom at about 340, 350. And at some point of time, this credit deposit ratio, which was 80 odd percent before merger, would eventually come, maybe 3 quarters from now. It's already at 103, 104. But on the credit side, while retail has grown like 3-4% quarter on quarter, the commercial and rural bank, loans have grown 3-4%. The corporate loan book, degrew at 2%, which I think to me is a little surprising. And that is where the market is not very, very, it's given a little lackluster response. Had the credit growth been a little better, I think it would make sense. So I think we need a probably, maybe it's got to do with the change of leadership. You have core finance guy leading the bank versus Aditya Puri was more a banker and a business manager. Maybe it's got to do with that. But you don't get 4 book value for growing credit at pace you are growing. Then you'll only get 2 book value, which is what HDFC is right now. Imagine, I would have never probably thought ICICI would trade at a premium than HDFC, right? We are seeing that now. So I think the credit growth also needs to come back along with deposit mobilization. It's a tough job, but as you rightly said, it still, I think, is work in progress.
Battle of HDFC Bank versus ICICI Bank or TCS versus Infosys has been ongoing, and it seems like that in both the sectors it's shifting a bit. But Naresh, what's your view on the charts of Triveni Engineering as well as Sterling Wilson Solar? Sterling Wilson Solar did hold a con call today, and they talked about how revenue execution can be to the tune of 8 to 9,000 crores. They're expecting orders from Reliance as well as that Nigerian company within the matter of few quarters. But on the charts?
So Triveni is a one-day move as of now. We've not seen a similar move in the sector, so I'll wait it out because this is sugar as a sector generally moves out together. SW Solar is interesting because it has had wild moves before. So the stock had gone from 300 to 400 back to 250, and in that recovery from October lows went to 650. So the last breakout for the stock was at 400 to 450 levels, which was also the high in 2021. In this dip, the stock made a bottom around that 450 to 470 mark and is now setting up for a fresh breakout. Sustaining about 650 would imply the stock is about to cross the resistance which the stock faced after the listing around that mark back in 2019. So technically, the long-term structure is positive. It remains a buy on dips between 550 to 600 with a longer-term view. Because when stocks come back and cross 5-6 year highs, they tend to surprise on the upside. So looks interesting. Would be a buy on dips.
Right, a buy on dips coming in for Sterling and Wilson right now. Just a bunch of other movers in trade. Interglobe Aviation, we were just chatting about that stock. It's shot up a good 5% now. It's sitting at the high point of the day, so look out for that. Voltas is now putting on more weight, another 7%, or rather 7% of a move is what you're seeing on the stock. And of course, Bandhan Bank as well is going very, very strong in trade right now. A bunch of other movers. There's ABB, which is higher by about 3.5%. PNB has done very well today. There's Havells, which is up 4% in trade. Canara Bank, wherein I think, there's a stock split which has got announced. Another 4% of a shot up coming in there. And Hindustan Copper has been a very strong one as well. That also puts on another 4% of weight in today's trading session. United Spirits, nicely chugging along. Crompton, LIC Housing Finance, there's MFSL, there's MCX, there's Polycab as well. There are some reports which are indicating that perhaps a price hike may be in the offing because of copper prices now being at a life high. So 3% of an uptick is what you're seeing on Polycab, SBI Life, Pidilite. It's quite a buoyant market right now. But Gurmeet, given that we are now going to step into the thick of earnings, right? Today you've got Reliance coming out with its numbers. From within the small and mid caps, any specific pockets where you think an earnings surprise could come in?
Selectively, I think we are tracking textiles. I think a lot of players like Gokuldas who have done acquisitions, added capacities. They're purely US dependent. I think we're trying to see if there's some traction building up in EU as well. They did 2 very good acquisitions. Had got re-rated from almost 400 to 1,000 levels, has come back to about 800 odd. We are looking at some defense and space names like Zen Technologies. Zen is more into simulators as well as anti-drone system would like to see what is the order book like, what's the guidance because of the situation unfolding. And we're also trying to do some bottom fishing in chemicals, see if that the inventory destocking is complete. Can we look at a better guidance? What's the pricing looking like? Or there are a few more quarters of pain. You got to be more chemistry specific there rather than generalize the entire chemical space. We'll probably look at fine organics, Tata Chemicals, a few couple of names there, and also some of the PSU names. We are trying to look especially on the energy side.
Point taken. So that's the view coming in as far as some of these stocks are concerned. But Tata Consumers is also in focus. It comes out with earnings tomorrow. If we can, let's go across to Vinny to get a sense as to what the expectations are, because it will be one of the first company from the FMCG pack which will be reporting numbers. But in the meantime, Kunal, a quick chart check on Tata Consumers as well as some of the other FMCG companies, if you like any, if you would want to recommend any bet.
So HUL is the only one which is looking attractive in terms of a potential bottom formation. Most of the other names, Dabur, Nestle, etc., I think these stocks have still not formed a major bottom for themselves. And looking at the way these charts are structured, they are neither oversold nor many of these stocks have come back to their key moving averages, 50 DMA or 200-day moving averages for themselves. So that makes the case potentially that the sector would not have bottomed out. But I think Tata Consumers could be a differentiated stock here because the stock is coming out into a breakout mode. 1175 is where the stock is trading, which is confirming a 3-week, 4-week swing breakout for Tata Consumers, breaking past about the previous highs of 1155 approximately. So that could potentially indicate that maybe another 25 to 30 point up move could be something which you can watch out for from an immediately short-term view.
By the way, Reliance has spiked up to its intraday high. The stock started off just about very quiet, picked up a little bit, then again dipped. And now we're sitting almost at 29.60 thereabouts in the futures for Reliance. So not looking bad at all, ahead of its numbers later today, post-market hours. But Gurmeet, we let you go on that note. In fact, I'm going to wind it up right here and throw it across to Vinny to walk us through how the trading day so far has been.
Looking at the day that has gone by so far, obviously we have Tata Consumers that has been buzzing before ahead of its numbers that will be reported tomorrow. We'll be keeping an eye out on that. And obviously Reliance today perked up a bit in trade, will be reporting its numbers. Let's watch out for that. Other than that, obviously we're seeing that the Nifty so far has actually managed to see and closing almost in the day's highest point, 22,300, 350 levels. Sensex 2 more up more than 600 points in trade, and mid and small cap managing to hold on to gains of 0.8% is what we've seen for the markets. Other than that, we have Persistent Systems, which is a bit under pressure, and Persistent Systems is mainly seeing a bit of a fall coming in today after the commentary for its guidance was remained quite flattish, so that is keeping Persistent Systems a bit subdued in trade. So yes, keeping an eye out on that. PSU banks, Nifty Pharma and Nifty Auto managing to see very, very strong performance today in trade overall. As of now, when you're looking at it, all the sectors are managing to close in the green, so no Monday blues coming in for the D Street, while media, metals and all of them have managed to gain almost 0.3% in trade. Looking at, in terms of the advance decline ratio, also clearly today we are seeing it's in the favor of advances versus decline. So yes, keeping an eye out on that. And in terms of the Nifty 50, what is managing to hold on to some bit of a gain today. Like I mentioned, Tata Consumers surely a strong gain coming in just ahead of its numbers tomorrow. BPCL, L&T, Eicher Motors, Hero Moto, all of them in focus. Let's pull up Lupin as well. That's the one we're keeping an eye out on after its launch of a tablet which is mainly for overactive bladder. That is something that is keeping the stock abuzz. Other than that, we also have the diagnostics names like Dr. Lal Path Labs, Metropolis, which have seen a bust today in trade of more than 2% after we did have a brokerage note. Voltas too in focus after we did have a positive note that came in from Voltas. So yes, keeping an eye on these summer stocks as well as Havells, which has been trending for a while. So yes, keeping some bit of a focus on this one as well. GSPL, that's the one that is a bit under pressure after we are seeing some rules that came in on that front by the PNGRB, and that is what is keeping the stock a bit subdued in trade today. Quite a bit of a fall that we saw coming in for GSPL, down almost 19%, while even GAIL, that's seeing a bit of sentimental pressure as of now, at least because of that. So yes, we're keeping an eye out on these stocks today. Zomato is another one after the platform fee was hiked as well, so that's keeping Zomato a buzz in trade. So that's how it seems like, you know, the market has been closing at. Most of it, at least the Nifty is managing to close on with gains of more than 1% today. 22,350 levels about there comfortably. Day's highest point is what the Nifty is closing at. Sensex too will be closing at the positive side. So yes, interestingly, what we're seeing in terms of an up move, that, you know, the markets managed to pick up pace by the second half of the day. Strong performance coming in on that front, and even the mid and small cap managing to perform well. But yes, that's how we will be closing down the markets today on this edition of Closing Trades. So it's a goodbye from me as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.